Hey guys, this is Scott Horne. We're going to talk a minute about how can we help our buyer qualify for a new mortgage. Maybe it's using a seller carryback loan, other mechanisms, and things of that nature based on what we as investors are trying to accomplish. So I hope you found the video helpful. If you do, take a minute and like the video. Don't forget to join our YouTube channel as well. We'd love to have you all there. And if you have questions about this video, please comment below. So let's just talk a minute about selling a home and working with our buyers. And we come across situations all the time where buyers need help. One of the things I like to kind of get across into investors is that it is easier for a buyer to refinance a home than it is for them to get a purchase money mortgage. Mortgage companies like to look at pay histories. They like to look at a history of how does a borrower make payments, whether it's a rental payment or a mortgage payment. And of course, a mortgage payment carries more weight than a rental payment does. So little things like that can help you get over some hurdles. So you're trying to sell a home, and for some reason the buyer just can't qualify for a certain dollar amount. Well, could you carry back a second lien on that property with the first lender's permission? That's going to be up to the lender and their underwriter if they can allow you to do that or not. And you want to get that disclosed day one so you don't spin your wheels or waste your time. Some lenders will say yes, some will say no. Of course, it's really all going to depend on who the borrower is, what their real qualifications are, and their credit score, because that will affect everything along the way. If for some reason you got a decent borrower, but they just need some time in order to get some things together and whatnot, this is when you may want to consider doing a short-term seller finance. I know your goal is to get the deal cashed out so you can sell the house and put money in your pocket. But sometimes, how can you maximize dollars when you're doing that? This is when I suggest doing an owner finance on the property. Use a loan servicing company that creates an independent third-party pay history that can be used to give to a future mortgage company. Now, mortgage companies like to see usually a 12-month pay history. They might prefer even a 24-month pay history. And of course, you work with your borrower to ensure they're making their payments on time. Now, that borrower may only be able to qualify up to a certain dollar amount, where you might have to carry back a second lien on the property. So that could be an option as well, like I said in the beginning. If you do this seller finance with your borrower with the intent to help them refinance, one of the things we got to be thinking about is can we put a balloon vehicle into our mortgage or not? Now, Dodd-Frank frowns upon balloon vehicles in a mortgage. By the way, a balloon guy means you amortize the loan over 30 years, but the loan comes due in 5. The loan comes due in 10 years, whatever that might be. So if you're not able to do a balloon vehicle, maybe you do what we call a step-up mortgage, which is where we create an initial interest rate, maybe 8%, let's say, just to throw a number out there, and it stays fixed for 2 years, then it goes up to 9% in years 3, maybe 4, then maybe to 10% in year 5. What you're doing is you're creating an incentive, of course, for that buyer to refinance. And from there, it's about educating your buyer as to what they need to do, because it really is all about them eliminating debt, making sure they make all of their payments timely, mortgage payment timely, credit card payments timely, car payment timely, because when they start messing up even one of those and they start getting credit dings, their ability to refinance drops off drastically and pretty quickly. Educating the buyer on these kind of issues is so important. Being willing to help them get to that point, being willing to even carry back a lien on the property yourself in a second lien position can help them get to that point. Now, does that mean you get all of your money up front? No. Are you getting the greater part of it up front? Yes. And you get some down the road. Now, you can build into your seller carryback lien, that would be in a second lien position, some type of protection mechanism where you are able to verify the first lien payments being made timely. It can be a condition of default that if they don't do that, it's a default under your mortgage. So you could move to take the house back if you needed to. And you want to find a way to make sure you build in proper protection mechanisms so that your borrower can't take advantage of you. Because remember, at least here in Texas, if that first lien mortgage forecloses, you get wiped out. So if you had a 5% seller carryback or a 10% seller carryback, or hey, maybe even something bigger like 20%, you want to make sure you protect those dollars for those kind of things happening. And so you can find other ways also to educate your borrower, because now that your borrower is buying this house, whether it's initially with the seller financing or with a mortgage, but now as a homeowner, they get that brand new thing called a tax write-off. You know, you can take somebody's PITI payment and usually multiply it by 10 in the first 5 years of the mortgage, and that's going to be their tax write-off on an annual basis. 10 monthly payments is what they get the write-off on their taxes. Guys, that equates to a lot of money they're getting back. They're not used to getting that back anytime before when they were a tenant in a property somewhere. And instead of letting them take that money and go spend it somewhere, like so many people want to do, teach them how to take that and make a principal reduction to you, maybe on that second lien, etc., because it will make their refinancing that home in 12 or 24 months much easier along the way. So guys, there's many ways to skin a cat when you're trying to sell a home, when you're trying to work with your buyer and get them qualified for that loan. It's just understanding how the mortgage world works, understanding what their requirements are, figuring out how you can help your buyers along the way, and create a higher velocity of sales for your homes. Hope you guys found this helpful. If you did, take a minute and like the video, guys. Jump over and don't forget to subscribe to our YouTube channel. Comment below, and we'll see you guys next time.